Trade. 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 copy trade.
Good day to everyone joining us from around the world. Whether you are just waking up midway through your trading session or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream section. My name is Ralph and I'll be guiding you through this exciting 2-hour journeys as your host. In today's live stream, it's not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have helped shape what WeMasterTrade represents today. Skilled traders, mentors, and role models with our community. First, let me introduce the ever-composed, always insightful Helen. Welcome, Helen.
Thank you so much, Rob. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about the trading strategy or rule, but about the full ecosystem that WeMasterTrade offers. From how you start, how you grow, to how you earn. It is the kind of law firm that doesn't just fund trades, it's building traders.
Absolutely, and next to her is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Hidden.
Thank you, Ralph, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is what we are going to unpack everything, not just what WeMasterTrade offers, but how traders can truly take advantages of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we're here for. Whether you are brand new to WeMasterTrade or already a part of our funded trades programs, today's live stream is going to give you the full picture. Not just the highlight reel. Over the courses of this section, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing these things differently from traditional brokers or platforms. Now I want to be clear, this isn't about sales, this is about understanding. We want you to know what you are signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funding project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundations.
Exactly, and from that philosophy flow everything we offer. Eventually, our trading packages we will be discussing in detail. We will explain the logic behind each one, what kind of trade they outlook at our packages and turn. Frequently right for me, and today we will answer that.
And more than that, we will also do a live comparison between packages. We will break down pricing, account sizes, maximum drawdowns, consistency rules, and even payouts side by side. To help you make a fully informed decision, it's one thing to see numbers on a website. It's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always, how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's sessions. We will explain what the daily loss limit is, how it's calculated, why it includes both closed and floating P&L, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we'll even address common misunderstandings about trade sizing and risk per trade policies.
And we don't just explain rules in isolation, we explain them in the context of live trading decisions. I will share some personal example of mistakes I made when I first started trading under funded conditions and how I adjust this. Because rules doesn't mean to reject you, they are there to protect the integrity of your growth.
And while we are on the topic of helping you succeed, we will be guiding you through our current promotion plan, including limited time discount costs, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We have had some amazing responses to our promotions, but also some confusions. So we will be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale-up plan, which I personally think is one of the most underrated parts of WeMasterTrade offerings. Many people don't realize this, but we have a structural growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income as WeMasterTrade is through our profit sharing model. This is a heart of what makes us different from law firm. When you trade on a funding account and generate profit without breaking rule, we share that profit with you up to 90%. But there's more to it than just a percentage. We will explain the full payout cycle, threshold, and timeline today.
Now, I know many of you watching today aren't just traders, you are also educators, influencers, or people with large networks. That's why we are also taking time to explain our affiliate program, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payouts, including a detailed explanation of the true referee rule and minimum funding conditions.
This is especially important because we want all our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We are diving into everything: packages, rules, promos, scale plans, profit sharing, and affiliate opportunities, all with one purpose in mind: having you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop in the chat. Our moderators are watching and we will answer as many questions as you can. Your voice matters.
And if you are watching this on replay, don't worry, we will leave timestamps and summarize below. And you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they are really care about helping traders succeed.
So to wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment to build real traders, to create fair structures and scalable pathways for people around the world who are serious about trading as a profession, not a game. So if you are here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into this journey together. So let's begin, and once again, welcome to WeMasterTrade LiveStream. Thank you once again for being with us today. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full pictures of who WeMasterTrade really is, what we believe in, and why we have built this platform the way we have. Because when you are putting your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so this next segment is about origin, intentions, and impact. It's about how WeMasterTrade began, what values underpin the platform, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two people who live and breathe these principles, Helen and Hidden. Let's start at the beginning.
Time wrap. To truly understand WeMasterTrade, you need to understand why its were created. Unlike many law firms or brokers that evolve from traditional financial institutions, WeMasterTrade were born with a purpose-driven mission to give a capital trader access to capital regardless of their background, location, or financial situation. We were founded in 2022 as part of WeMasterTrade Group, headquartered in Vancouver, Canada. While WeMasterTrade built its signal sharing, investment network, and copy trading tech, WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high-potential traders, giving them the pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, that's the fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk. We give you a roadmap, you bring the skills. But we also know that skill alone isn't enough, which is why one of our founding principle is education first. We don't want traders to blindly follow rules. We want them to understand the logic behind the structure. That's why we have invested heavily into the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychologies on the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We have designed a curriculum to match the real-world trading environment within WeMasterTrade, so what you learn you can apply directly to your funding account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO 21001 2018 certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structures, and learner engagement.
That certification is a big deal because it shows a long-term commitment to developing trader, not just a collecting fee. In an industry where many so core problem come and go, WeMasterTrade had to position itself with a real operational stability, compliance framework, and internal accountability. We're not here for a season. We're here to help build career.
And we have seen that commitment translate into a real story. If you visit our testimonial pages, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all talking about how WeMasterTrade helped them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have had students become full-time traders. We have had women re-enter the finance world after career break. And we have had young professionals from underbanked regions finally access the markets with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share weekly insights, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends and we keep our traders informed. But let's also talk about cultures. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote traders' integrity, respectful competition, and knowledge sharing. Whether you are in Telegram group watching our YouTube series or engaging with us on live support, you will see that we actually listen.
And I will speak honestly here. In many platforms, the trader is just a customer. As WeMasterTrade, the trader is the product. Your performance right the business, your role shape the platform, and your consistency determine how far we can scale together. That merger accountability is rare and is something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our funded accounts, and connect with people who have gone through the system. The stories are real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We're here to challenge the status quo of trading access, to build systems that reward performance over promotions, and to create real scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement. And if you are ready to be part of it, today's live stream will show you everything you need to know. So, thank you Helen and Nathan for that deep and honest walkthrough. Coming up next, we are going to take this foundation and connect it directly to our actual offering. That means we will be discussing on the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of result you can expect from them. Now that we have explored who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structures that best align with their goals, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures, we're talking about framework. Each package at WeMasterTrade represents a different pathway toward growth, and today we will walk you through all of them, what they offer, how they're structured, and most importantly, who they are designed for.
Exactly, Rob. As WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we have built two distinct rules that apply for trader: the challenge package and the instant funding package. Each line includes a variety of account size and a configuration. Because we know that traders come with different strength, risk appetite, and timeline.
Let's begin with the challenges model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. It's structured, fair, and it has become the most popular role for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a single account and your goal is to meet specific profit targets while staying within strict but a reasonable risk parameter. There are 3 stages in total: phase 1, phase 2, and then the funding stage.
So take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target reaching 800 without reaching a 5% day loss or a 10% over loss limit. You will have an unlimited time to achieve this. That's a key difference from many broker firms. We don't pressure you with the deadline.
Once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That's $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where you trade with the real capital, have no profit targets, and your profit share jump up to 90%. That's one of the highest in the industry.
This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. If you are still refining your strategy or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now, for those who are confident in their strategies and want to start with a larger account size, we offer $25,000, $50,000, and even $100,000 challenge packages. The structure is similar, through phases, the same 5% daily and 10% total loss limit, but the profit target scale proportionally.
And for example, in the 50,000 challenge, you will need to hit 4,000 in phase 1 and 3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
The $25K to $100K challenges are ideal for traders with more capital management experiences, especially those looking to eventually scale into larger funded accounts. If you have already passed all the prop challenges or have a strong verified trading history, this is a good step up.
Well, every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on reserves? That's where our instant funding package comes into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced, disciplined traders the chance to trade real capital from day one. No evaluations, no demo stage, just pure live trading backed by a structured, fair, and transparent system.
And the one is even more accessible in that you can choose from several different account types depending on your story, preferences, and your goal. Today we are going to walk you through 8 of the 5 main instant funding packages. There's standards, 51010, 510 510 novice, and customized. We will compare the detail, but more importantly, we will help you figure out which package is right for you.
Let me set the scene quickly. On our instant funding package give you the live trading access from day one. That means no challenge, no evaluations. You pay one, follow the rules, and you are trading live capital, and every account, no matter the size, includes no time limit up to 90% profit share, scale plan toward $1 million, support for EA swing trades, scabbing, and even HFT. Now let's go package by package, and as we go, Helen, Eden, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you have seen succeed with each?
And now let's start with the standard package. I will describe this one as the best friend for trader, which is one stability. You're getting up to 200,000 in capital with very measurable 4% daily loss limit and 6% over limit.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you're taking a slow and steady approach.
And how about the commission?
The computer TT across the board forex at $5 per loss, grow at $6 per loss, index at 0.5, and stock at just 0.07 per loss.
And everything is allowed. News trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understand your strategies, want a full range of assets and plans to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stretch with target-based challenges. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I would also say it's to swing trader. The 4 or 6% risk profile give just enough flexibility to hold multiple day position, especially the weekend holding for a while.
Alright, moving up a gear, let's talk about the 510 package. Same capital selling up to $200,000, but you now get 5% daily loss and a wider 10% overall limit. Why does that matter?
That execution is massive for traders who scale into positions or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here also 10%, which is like wow with the rig window. But you still get full support for scalping EAs, new trading. It's very trader friendly.
This best for day traders, especially those trading assets like Nasdaq or gold that move fast. If you have got a test intraday strategy and just need some risk breathing room, this is your packages.
And also for traders who want to struggle but don't mind having that profit targets, the limits will motivate some people, especially if they pay out oriented.
Now here's a personal favorite, the 5-10-0. You get 5% daily, 10% over loss, but no profit target.
And that's a lesson for high precision trader. You're no longer chasing a number. You just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
And this bucket perfect for a veteran swing trader, a reconstruct trader, people who prioritize consistency over speed. If that's you try here.
And let's be honest, not everyone wants to hit targets. Some just want to trade well and scale up cleanly. This stay home.
Now, for the rule breakers, or rather those who don't want to be evaluated on how even their profits are, the 5-10-10 WC removes profit consistency tracking, right?
Exactly, same 5/10 risk profile, but you are not required to keep your profit growth smooth.
That's it. Trade copier are not allowed in this one. It's also a manual trader only, and you need to trade responsibly. But for average trader who sometimes hide with high speculative display.
Perfect for high risk reward trader or anyone who has had issues with consistency rules at other firms. You trade what you want, just keep it inside the drawdown box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily lots or lot to your liking. But you can fund up to the 400,000 and more than any other account.
It's premium, flexible, and comes with all trading styles allowed, including EIs, new trading, weekend holding, HFT, and more. Top-tier professionals, hedge fund traders, signal providers, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say if you try the motor and nothing quite fit, build your own blueprint with customize. That freedom is rare.
So to sum up, every instant funding package we offer comes with clear risk parameter, fair commission, deep market access, and real profit potential. There are no time limit and payouts start as early as 1 day each.
And no matter your strategy, scalping, swing, auto, or manual, there an account that's live with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid glitches, and understand the key risks and consistency rules that power our entire platform. Alright traders, now that you have seen the package, let's talk about the part that either make or break your account. That's right, it's time to dig into trading rules. And now to actually stay compliant once you are funded. Because, let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account is comes down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rules traders think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it really works, it's become one of the best tools for recontrol. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's a maximum amount of loss you're allowed to incur in both floating and flow trades on any single trading day. If your equity falls below that limit even for a moment, your account is automatically closed.
And the key thing is here is the loss is calculated from the higher or either your balances or your equity at the start of the trading days. That's a really important distinction, and that is what trips a lot of people up.
Now let's walk through a live example. Imagine it's the stop rate is 5, your balance is $105,000. Your equity, however, is higher, $107,000 because of open floating profit.
And if you own a 4% daily loss limit, we calculate as of the higher number, 107,000.
So 4% of $107,000 is around $4,000. That means your equity is for the rest of that day can drop below $102,000, or boom, your account is gone.
Right, and I think it's important to point this out. The system isn't waiting for a close, it's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
Now let's reverse this. Say it's the day of 7, your balance is $100,000, but your equity is $99,000 because your open trades are slightly in loss.
Since volume is higher, we estimate the 4% on the initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999 after liquidation kicks in, no warning, no margin call.
The system will send a market order to close all trades. Everything liquidates. Your account is disabled and you can't trade again unless you purchase a new package.
And here's the kicker, how the afterglow happens when the system detects the threshold was crossed. But due to market fluctuation, your final profits and loss might look worse than the actual threshold. That's because the system executes a closure based on price leverage at the time of liquidation.
So even if you only intended to take a $3,900 loss, once leverage spikes in, go on NASDAQ, and suddenly it's $4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule, because this is where the pro mindset kicks in.
And so for the first tips, know your buffer. Never plan trade to take your right up to the end of your limits. Leave at least 10 to 50% room below the mark lot, especially in volatile markets.
Tip 2. Check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you are heading toward your violations.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide rich dashboard that show you your live loss status. Use them, check them, don't rely on memory.
Also, poor trading after the big loss early in the day. If you lost 3% in the first hour of planning session, maybe it's time to stop and reflect. Not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NFP with full loss size, you are practically breaking to break the daily loss rule, cut position size and ride post volatility.
So, the next question is, what are the top rookie mistakes you see when it comes to daily loss?
And the number one, over leveraging. Traders open positions that are 5-7% of their account and thinking they will grow quickly, but if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to the 60 pip gap, the daily loss could be hit before you even open the eye.
And the third, assuming that closed trades are on that matter, they are not. Remember, equity includes both floating and closed positions. The total equity line is your score.
And I always say this to new trader, daily loss rule isn't your enemy, it's your account airbag. It is designed to protect you from doing irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside that box, you will last longer than 90% of the market.
And one last note, this isn't just about rule, it's about trust. We MasterTrade fund you because we trust that you will manage it responsibly. The daily loss is there to protect that trust on both sides. So that we have gone through the daily loss. After a short break, we will continue with the mass loss rule.
We copy trade. copy trade. Copy trade. Copy trade. 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 Trade.
Welcome back, traders. In the previous segment, we covered the daily loss rule, and if you haven't already clicked that one, you are missing out. But now we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss, the line that can't be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rule works. They think, wow, I didn't hit my daily loss, so I'm fine. But then a week later, they have a choose away their account and should liquidation.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, that it means the account is deemed unsalvageable under your current trajectory and it's closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is your real-time capital including open trades, ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss which reset every day, this one doesn't reset. It's cumulative. You can lose 2% one day and 3% the next, and if your total loss crosses the line, that's it.
And the percentage limit depends on your packages. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of $50,000 and your max loss limit is 6%, which is $3,000.
That means your equity account can never go below 47,000 ever. Doesn't matter if you make 1,000 yesterday, the total loss from your highest point back down, that the result it won't matter.
And remember, this rule includes both gross and losses and floating losses. So if you have lost $2,000 in closed trades and you have another $1,200 floating in red, your equity is now at $46,800. That's below the limit account close.
And just to be clear, it's not about the net gain or loss across trades. It's about when your equity stands in real time relative to that stop loss clause.
And here's where it gets interesting and a little tricky. Let's say your account goes to 51,000 convert, you are in profit.
But your max loss limit is still based on your original $50,000 starting balance. So if your limit is 6%, the threshold is still $47,000. What changes is how much room you have to fall before you hit it.
Exactly. You now have $4,000 in total buffer because 51,000 minus 47,000 equals $4,000. So your profit gives you cushion, but the floor never moves.
Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if the volatility or slippery, your account might close out below that line. That just equation reality.
And most importantly, once it's breached, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollback.
Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
And the first one, track your total close losses every day. You should always know how close you are to the mark loss floor. Don't wait for the dashboard warning. Calculate manually.
Second, use your profit as protection, not permissions. Don't treat floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss sign when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shutdown in a few minutes.
And finally, start to warn your close. If you're down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause everything you're in trying.
The biggest mistake, underestimating floating drawdown. Traders close 3 losers and think, okay, I have still got room, but they forget about the fourth trade, floating minus $1,800.
And second, a trader who trade recover after a bad day. They lose 4% in one day, come back screening the next day thinking they will make it back, and instead take another 2% and boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, news candle can get you straight through your limit.
And the mark loss rule is there for the reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know see their stop loss, whether personal and intentional, as a non-tillable boundary.
Right, it's a reality check. If you are consistently brushing up against the max loss and your max loss, the problem isn't the rule. The problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structures, and the max loss rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both closed and floating losses, and once breached, your account is gone. Coming up next, we will explore the consistency rule and why steady profit matter more than big spike when it comes to growing, scaling, and getting paid.
If you have ever made $5,000 in one day and made $200 in the next 4 days, and wonder why your payout got flat, this next segment is for you.
Let's dive into the rhythm of profitability and how to stay consistent under WeMasterTrade model.
Alright traders, we'll talk about daily loss limit, and we just covered the maximum loss rule, two pillars of protecting your capital. But now it's time to shift gears just a little and talk not about risk but about research. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day, you need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky strike from a reliable trader. It tells us whether you can make money over time or you're just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawals, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is the measure of how even your profits are from day to day. The more balanced your profits, the lower your ratios, the less consistent, meaning you have one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total will come from one day, that's not consistency. That's a luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can be scale.
The formula is really straightforward. Take your best trading day's profit and divide by your overall profit since you started the account, then multiply by 100.
Best day divided by total profit multiplied by 100 equal profit consistency ratio.
And just to be clear, the bad day refers to your highest close profit in a single calendar day, and total profit is the sum of all your close profits minus any close losses and open losses across the line of the account.
Let's say you have had the following results over 5 trading days. Day 1 plus $100, day 2 plus $200, day 3 minus $50, day 4 plus $100, day 5 plus $60.
And that means your total net profit of 5 days is 100 plus 200 minus 50 plus 100 and plus 60 equal to $410.
And the best day was day 2, that 200 profit.
So now we apply the formula. $200 divided $110 equal 0.4878. Multiply that by 100 and you get the profit consistency ratio of 48.78%.
Now, let's say your account requires 20% profit consistency. We can come on. This trader is worried about that, so they couldn't qualify for the payout yet.
So even though this trader is profitable, they are not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to trader. If you rely on one or two big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluates your consistency over time. Traders who show long-term balance are the ones who get scale up, who get featured, who get just with more capital.
Alright, so let's address the number. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. Let's say you are over the limit. Don't panic. You are not disqualified. You just need to keep trading and even out of the curve.
And here, how to do that. The first one, trade smaller size for a few days. The second one, take smaller controls win and for $200, $300 a day. The next one, avoid the big swing trade that could spike your ratio again. And finally, spread profit across multiple days and not one month's setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profit heavily into one day, you might need to rebalance it. The bot might be profitable, but it won't pass this rule unless it's configured with payout logic in mind.
Mistake 1, traders hitting target early, then taking the rest of the week off. That inflates your best day and leaves the rest of your curve flat.
Message number 2, overtrading after the big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake 3, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
At the end of the day, this isn't about controlling you, it's about building habits that can handle scale. If you can't be consistent with $25,000, what happens when we give you $100 and more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we have seen it time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referral, and grow into six-figure funded accounts.
So don't fear the rule, understand it. Use it as a feedback tool. If your ratio is too high, great. That means you have got profit. Now keep going, balance it out.
And remember, you don't need to calculate manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it anytime under your started tab.
To recap, this rule is about balance, not volume. And to keep your best day under 20% of your total profit, spread your wins across multiple sessions and monitor your progress in the dashboard. We have walked through the daily loss limit, tackled the maximum account loss, and examined how your profit consistency shape your long-term payouts and growth. And now we arrive at the finals and perhaps most overlooked rule of the risk consistency rule, or what we call the discipline test.
That's right. Traders often think the biggest enemy is the market, but truthfully, it inconsistent, especially in how much you're working from one trade to the next.
This rule doesn't look at how often you win. It looks at how stable your risk is and how professionally you managing your position sizings. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that involves all losses associated with that trade idea, both low losses and floating losses. Even fees, commission, and swap are counted.
And for some accounts like the 510 OPC packages, this rule gets even stricter. The limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcomes, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that makes you hard to scale.
This will protect both you and the firm. It helps reserve capital, prevent large equity swing, and to make sure your assets lay out over time.
Think of it as your account hit bit. If your position size goes up and drop and down, 0.5 loss one day, 5 loss the next, the system flags. That's not structural, that's chance.
This is where it gets technical, but stay with us. The term trade idea isn't just one order, it's a group of trades that share the same logic.
If you open 3 buy position on gold at a different time, that's one trade idea.
Because it is the same symbol, same direction, and close around the same times. Even if you open them at different times, they are seen as a single, unified positions from a risk perspective.
So the system doesn't look at your trade in isolation, it groups them into logical bundles and applies the 2% rules across the entire bundle.
And so what's allowed? You can have a multiple separate trade idea as long as one respects the risk limit.
For example, if you go long on gold, short on GPY, and short on AUD USD, and each position has its own distinct direction and access, those are 3 separate trade ideas, and each one can reach up to 2%.
Let's say you go buy on gold and then you go buy again and again. Now you have 3 open positions in the same direction on the same access.
Yeah, the system treats that as one trade idea. So if the combined floating risk and eventual loss from those positions exceeds 2% of your starting balance, boom, you are broken the rule.
So let's go hands-on. Suppose you have a $100,000 account. The 2% mastery per trade idea means you can't lose more than $2,000 on any trade ideas total.
So you open to go buy one lot each. You don't apply a stop at new hits, make it drop 100 speed, it loss $1,000. That's $2,000 total.
You're right on the line. If slippage or swap adds a few extra dollars, that is rule broken, account flagged, and or liquidated depending on enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funding status or immediate closure.
Tip 1. Set your loss size based on account risk, not emotion. Know how many pips equals 2%.
Tip 2. Use stop order rigidly. Set them based on your risk per trade idea, not random chart level.
Tip 3. Don't start trade without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you are entering on the same setup, treat it as one, size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller. Use a micro loss if needed. Keep the total exposure below 2%.
The most common reason traders break this rule, stacking multiple entries on one trade idea thinking it's still separate.
And open high reach trade after win, assuming they are playing with the hard money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade might not be closed, but the floating rate still counts toward your 2% risk.
And this isn't just policy, this is professional practice. Hedge fund followed this, bank followed it, real trader followed it.
Exactly, we are not here to micromanage you. We are here to protect your account, our capital, and integrity of this community.
And traders who internalize this rule, who understand that small consistent risk is the foundation of scalable capital, those are the ones we grow. Those are the traders who go from $25,000 to $1 million. Okay, traders, before we wrap up this section, we will go through the news calendar of today.
Okay, welcome back to our daily market insight. It's Thursday, November 13th, and today we have got some high import data from Australia and UK that could strengthen out on the charts. And here on our, how are you the market looking this morning?
Hey Helen, pretty exciting start to the day. The spotlight is definitely on Australia labor market and the UK's GDP figures, both rest for the events, meaning we could see some volatility for AUD and GBP pairs. Let's start with the Aussie data first. At 7:30 a.m., we got Australia employment change and unemployment rate, and the results were much better than expected. Employment rose by 42.2 thousand, doubling the forecast at 20,000 and way above last month's 12.8 thousand. That's a strong sign that Australia's job market is still expanding heavily. On the top of that, the unemployment rate dropped to 4.3%, beating expectations of 4.4% and improving from 4.5% previously. So both the headline and the rate are showing solid labor strength.
That's really impressive. So Hayden, with those results, what the reaction in the market so far?
Well, Helen, the AUD saw an immediate boost after the release. Traders priced in stronger fundamentals and possibly less pressure on the Reserve Bank of Australia to cut rates anytime soon. However, I would say this move could be short-term because we still have broader global sentiment to consider, especially with risk assets moving cautiously this week.
All right, now switching gear to the US, we have got some key GDP number coming up at 2 p.m. What can trader expect there?
Yes, the UK will release both monthly GDP and MOM and preliminary quarterly GDP Q-over-Q figures. The monthly GDP came in flat at 0%, which is below the forecast at 0.5%. Meanwhile, the prelim GDP Q-over-Q showed 0.2%, slightly under the expected 0.3%. These numbers confirm that we have been saying the British economy is slowing down a bit as higher interest rates from the Bank of England continue to bite.
So we could roll that might put some pressure on the GDP, right?
Exactly, the CPY could face short-term downside, especially if traders start to think the BOE might have cut rates sooner than expected to support growth. But remember, it's not a collapse, it's more of a mild slowdown that the market has been pricing in already.
So to wrapping up, Australia surprised to the upside strong short growth, giving the AUD some bullish momentum, while the UK disappointed slightly on GDP, which can keep the GBP under pressure heading into the London session.
That's right, traders should watch for follow-up moves during the European sessions, especially around the GBP over USD and AUD over USD pairs. And since it's Thursday, volatility could pick up as we head toward the weekend.
Right inside as always hidden. Alright, guys, that's our market update for Thursday, November 13. If you find this helpful, don't forget to like the stream and follow more daily updates.
Okay, thank you, Helen and Helen, for your insightful analysis. Now, traders, is the end of our live stream session for today. See you soon.